Well, more and more companies are cracking down on remote work and ensuring employees are coming back to the office. Diana Olick has the details on what it could mean for real estate investments. Diana.
Well, John, in the past year, U.S. companies made more progress in getting employees back to the office than at any time since the pandemic began. That, according to a new report from CBRE. Nearly 3/4 of the 184 companies surveyed said they have met their attendance goals. That's up from 61% last year. The share of companies monitoring attendance jumped to 69% this year from 45% last year. And those enforcing attendance policies rose to 37% from 17%. More companies said they expect to expand their office footprints rather than contract. Obviously, there's been a big slowdown in office development, as well as a surge in conversions to residential. Now, 67% of companies said they will either keep their office footprints the same or expand within the next 3 years. That's up from 64% a year ago. For expansion, most pointed to business or headcount growth. Overall, office vacancies are 18.9%. Still high, just under that 30-year high of 19%. The wild card in all of these numbers, of course, is tariffs. Now, this and other big plays were in our latest Property Play newsletter. The next one is out tomorrow. Don't miss it. CNBC.com/Property Play, or use that QR code to sign up. Back to you guys.
All right, Diana, I want to ask you about a nuance in those vacancy numbers. Prime, that very highest quality subset of Class A, I think the vacancy number is lower, right? Like closer to 15%. Yeah. Is there price strength, therefore, particularly in prime, given that companies seem to be ramping up their need for space, and it was already, the very best spaces were already at a bit of a premium?
Yeah, and interestingly enough, in this report, it said that a lot of those companies were reporting that it was actually difficult to find more Class A office space. That's what they really want. That's what is in demand. And that's where you're getting your pricing power. There hasn't been a lot of new development since the pandemic, so you're not getting more of that Class A, which is, of course, in such high demand. So, yes, pricing power there. It's the Class B, Class C. Those are looking to conversions, and their pricing power is non-existent.